Are you executing your day trades based on stock market astrology? Or worse, Wall Street bet signals? Then I have a prescription for you, this video, for which I carefully crafted and formulated this technical indicator tier list to help you go from this, to this. Since technical indicators are at best decent at predicting price movement, we're gonna use this alternate tier list for this video. Let's start with the most American indicator. And I'm not talking about the MACD here. I'm talking about the ARMS index. The ARMS index is all about volume, boys. It basically shows you the relationship between prices and trading volumes of stocks in a market. If the ARMS index is high, it suggests that the market is oversold. This could mean that the prices are gonna go up again. Which is an irrelevant piece of information because stocks
only go up.
The ARMS index isn't particularly easy to use and its signals are as strong as your average Reddit moderator. ARMS index? More like ARM index. What is the next indicator gonna be? Another piece of unusable garbage? The Fibonacci retracement. I know. You're not into math, you're into money. But hang in there. The Fibonacci retracement got you covered. It basically identifies potential support and resistance levels based on some simple first-grade maths. Just slap on the auto Fib retracement, or draw it yourself like a pleb. Then the Fibonacci levels function as potential support in an uptrend and as potential resistance in a downtrend. Overall, pretty solid choice. The Chaikin money flow tells you if money flows in or out of an asset. If it is positive, money flows in, and if it's negative, it is just like your Robinhood account, money flows out. While this will seem solid in the feeble mind of a degenerate, the Chaikin money flow is not as easy to interpret for the average trader as some of the upcoming indicators, and the signals are pretty limp. Straight to the technical indicator trash. Speaking of limp, let's look at your relative strength index. Where is the relative strength index gonna go? Finally, a decent one? This indicator basically shows you if a stock is overbought or oversold. So if you want to take your buy high sell low strategy to the next level, you can use this indicator to buy stocks when the RSI is above 70, and sell them when the RSI is below 30 again. This indicator is both very easy to use and pretty powerful. Our first decent indicator. Next, ease of movement indicator. Imagine the ease of movement like lube for the stock market. This indicator basically shows you how easily the price of an asset can slide up or down, which will help you identify trends or trend reversals. The ease of movement indicator is easy to use, but the signals are often unreliable and tend to lag behind in a fast-moving market. It is also completely useless when it's used alone, straight in the indicator trash. Next, the Williams alligator. This swamp puppy is gonna help you find trends and potential entry points. Alligators in nature actually only have 3 body parts: a jaw, teeth, and lips. The swamp puppy indicator is the same. It has a blue line, red line, and a green line. These lines are 3 different moving averages. If the 3 lines form a compact straight line, the alligator is lurking. If the green line, the fastest moving average, starts to swerve down, the alligator is going for a dive. And if it starts to swerve up, the swamp puppy is about to yoink you out of the air. The Williams alligator is both easy to use and more reliable than the stock market lube, but it tends to lag behind, of course. Overall, not bad. Next, detrended price oscillator. The detrended price oscillator basically detrends the price. By removing the trend component, this technical indicator can help us find cycles and short-term patterns. So, basically Wall Street astrology. We have 6 technical indicators left, and only 1 decent indicator so far. Is this next one going to be decent again? The Bollinger Bands? The Bollinger Bands are so easy to use, even people with insufficient brain cells to accommodate a positive IQ can understand it. The only thing you need to know is, buy when the price touches the lower band and sell when it touches the upper band. This indicator is very easy to use and powerful, which makes it a decent indicator. The stochastic oscillator. This indicator is what you get when you order the relative strength index on wish.com. Like the RSI, the stochastic oscillator can help you identify overbought or oversold conditions. But unlike the RSI, it tends to produce false signals during strong trends, which will supply you with a shitload of certified moments. As a result, we are legally obliged to open up a special tier to accommodate the stochastic indicator. Next, the Chan momentum oscillator. Another indicator that can help you identify overbought or oversold conditions. If the oscillator is above 50, the market is considered overbought, and if it is below -50, oversold. For example, right here we have a value of +100. This should indicate that the market is overbought, which should lead to a downward price correction. Next, the second most American indicator. The MACD. The MACD, just like the MACD, has two lines. A fast one and a slow one. And just like the MACD, you're gonna lose money in the long run. Basically, if the fast line crosses above the slow line, we can expect the asset price to go up, and if the fast line crosses below the slow line, we can expect the price to go down. The MACD can also help us identify trend reversals when the asset price and the MACD start to diverge. Overall, the MACD is very easy to use and relatively reliable. Decent choice. Arun oscillator. We have two lines again. The Arun up and Arun down line. They essentially show you how recently the last high or low was. Put your chart on 1 day, and set the indicator to 28 days, and it's basically a period tracking app for the stock market. The Arun oscillator is the difference between those lines. A high Arun oscillator indicates that the highest closing price is more recent than the lowest closing price, suggesting bullish strength, and a negative value indicates the opposite. The Arun oscillator is easy to use, almost too easy, but the signals are so weak though, you might as well buy stock signals on Fiverr. Astrology tier. And there you have it, the Do You Even Invest technical indicator tier list. So now you could go ahead and pick any of the decent indicators and make a shitload of money. Disappear, because
Trust me, you're not that guy.
the real S+ tier is picking multiple of the solid ones and using them together. You're still gonna lose money, but at least it won't be the indicator's fault. For example, let's pick the relative strength index and the MACD. Now we're gonna buy a stock when both indicators give us positive signals at the same time. That's the case when the RSI is showing us an oversold condition, and the fast line of the MACD index crosses above the slow line. Now that the stock is overbought and the MACD line is starting to cross below the signal line again, we're going to sell the stock at a handsome pro. Never mind. Feel free to like and subscribe for more low-quality gambling-related videos, boys.